Business news now. Stephen Carl is with us in studio. Stephen, today we're starting with Facebook, which continues to grow in popularity.
Yes, believe it or not, 1 in every 2 internet users around the world is now on Facebook. The social network's seen a continued shift towards mobile use, with almost 1 billion people logging in to the site every day. All of that good news for the company's bottom line, as Fernand van Tetz reports.
It's a pleasure we indulge in increasingly often, and mobile use is driving up Facebook's earnings. In the last quarter, the company saw its revenue increase 39% year-on-year to over $4 billion. Roughly 3/4 of advertising revenue came from mobile. The reason that Facebook is doing so well is that not only are more people accessing the service, their number of users grew by 13%, but we are using it for longer. 1.5 billion people, almost half of the world's internet users, check Facebook at least once a month. 65% of them check in daily. In total, the average user spends 46 minutes a day on the social network. The largest part of the company's growth is from areas outside of Europe and North America, primarily Asia. It's also increasingly mobile, as smartphones become accessible to a larger part of the population. Facebook's chief operating officer, Sheryl Sandberg, said Facebook continues to get more than 1 out of every 5 minutes on smartphones in the US. The company dominates the mobile phone, also owning messaging service WhatsApp and photo service Instagram. Those acquisitions help explain why, although revenues are up, profits fell by 9%. The company has spent more. Expenditure increased 82% to $2.8 billion. That includes investment in data centers, research and development, and hiring people for the future. But it's a number that has investors worried. Facebook's share price dropped 3% after the results were released. Despite doing better than expected, Facebook will have to prove that its high costs will pay off.
Well, here in France, a deal that will help the nuclear company Areva out of its financial mess has finally been agreed.
Yeah, Areva's been in need of a bailout since it reported losses of almost €5 billion for last year. Its business was hit by a slowdown in demand for nuclear power stations, as well as delays in building next-generation reactors in France and in Finland. Now, at the direction of the French government, it's done a deal with another state-owned company, this time the electricity firm EDF. It's going to sell up to 75% of its nuclear reactor business to EDF for €2.7 billion. But there are conditions attached to. EDF won't be exposed to any financial risks from the delayed EPR reactor in Finland. Areva and EDF will then create a joint venture for building new reactors that will be majority owned by the electricity company. Now, the two sides expect the deal to be done by the end of 2016. Areva said earlier this year it needed €7 billion, so it's still going to need more help from the government to make up that lost money.
Now, Stephen, lots of companies announcing their results today. How are the markets reacting to that?
It's Corporate Mega Thursday, as I think what people are calling it. So first of all, EDF and Areva, they both opened up over 1% after news of that deal. So investors obviously pleased. The British bank RBS, that's up over 3.5%. They reported a surprise increase in profit by 27%, despite some pretty hefty legal charges. Alcatel-Lucent, remember, of course, was bought by Nokia. Their shares are up at 6% after announcing a shake-up of their management. Also results from Nokia, Safran and other companies too doing pretty well. Nokia and Safran up over 4% in shares and trading today. Over in Asia, it was more issues to do with the Federal Reserve that was weighing on the markets there. You can see the Nikkei in Tokyo up over 1%. Small gains too in the Hang Seng in Hong Kong and the Shanghai Composite. This after the Federal Reserve left interest rates in the United States unchanged. Let's take you through some more of those company headlines now. Staying with the car industry first, Renault's net profit soared by 86% in the first half of the year. The jump mainly down to increased sales in partners Nissan and Daimler. Car maker confirmed its forecast of 5% sales growth in Europe this year. Shares in the company, though, down 6% at the open in Paris. Royal Dutch Shell is cutting 6,500 jobs as it slashes spending over the lower price of oil. The oil company cutting $7 billion from its capital investment plans for this year. The price of oil is down 50% in the past year. Shell's boss says prices may remain low for some time. And profits have fallen again at Samsung despite the launch of its latest smartphone, the Galaxy S6. Overall earnings for the South Korean company fell by 8% between April and June, but revenues in the mobile division down almost 40%. Samsung's been facing increased competition in the smartphone market from Apple as well as from other Chinese brands.
Okay, Stephen, we're going to have to leave you there. Thanks indeed for all the business news.